The S&P 500 daily chart, looking back to the last Bollinger Band squeeze back in May 2023, and the similarities to the current era can be considered uncanny. You can see the move up here, just like here, then another downdraft here, and then a breach just like here, over here, and then it stayed under the mid band for a while and then hit the upper band, back to the lower band, and then off to the races. So let's see what happens here. It's like it's just starting now as the upper band and lower band continue to get closer to each other. 48.14, and this one's 47.25, so the squeeze is getting tighter. And the upper Stark band and channel 3 high are still traveling pretty close together. Channel 3 high 48.60.97, and the weekly chart is not that far away for the channel 3 high. It's at 48.44.30, so they're close together, and around that area 48.40 to 60 is high resistance. And with lines switched on, the ongoing supply line above here needs a gap up higher than this high, 47.85.79. That's if it doesn't make it gapping up above 48.02.11, so it could gap up within that little area there and then close above it, and it will become qualified, or a straight up gap up above the ongoing supply line and close above it for end of day will qualify it that way too. A straight up close below the ongoing demand line will qualify that for end of day. And price made it back above the cloud conversion line and 20 simple moving average quite handily there. Just blasted above it. I believe there was a gap up, yes, and then it had a bounce off of the conversion line intraday and then had a really nice close. And it closed above the Bollinger Band mid-band, so it spent 2 days, or 1 day actually, below the mid-band, and then now it's back up above it. And price had the price flip back to the sell setup count 1, and to negate that for end of day today on the 19th, there must be a close below 47.83.83 for the price flip back to the buy setup count 1. And price in the pre-market hours for the S&P 500 at 6:05 a.m. on the 19th is 48.03. So it's within spitting distance of the all-time intraday high at 48.18.62. And in this S&P 500 daily cloud chart with zigzag showing, you can see that it's still in limbo. Now there's a higher low here, so we need 4 more in a row, and we'll get the zigzag line to straighten out, probably anchoring at wherever the 5C shifts over to. And this 50% momentum level was qualified yesterday, and it went above the 50% exhaustion up, so that's qualified also. So if there's a open higher than this close from yesterday's bar and ticks higher than this close on January 12th, which is the true high of the 4-bar sequence, and then closes above this close from the bar on the 18th, all happening today on the 19th, this will become qualified and confirm this relative up 3 and the 50% propulsion exhaustion up. And that will tell us that we're going to shoot for this 100% qualified and confirmed propulsion exhaustion up around 4,900. Right before there is this relative retracement up 4. And I moved this ATM exhaustion alert out of the way so that we could see the propulsion 50% levels. So that printed, and that could indicate sideways action for the next 8 bars. So it's active and valid for about 8 bars, and it could be sideways price action like back here. You can draw lines like that. Or it could have a downdraft that could get pretty serious. This one looked like it was going to get serious here after this one printed. That was that big bar called an outside reversal day there, and it certainly was, but then it recovered nicely. So this is something to keep in the forefront. And in this weekly S&P 500 chart, it looks like the propulsion qualified exhaustion up for 50% will more than likely get tagged today, and that will be higher odds of having more upside. And again, that doesn't mean straight up. Sometimes it reaches these lofty goals and then has a pullback. And in this S&P 500 daily chart, with every combo and sequential cell countdown 13 known to the mark showing their risk levels, not so much the 13s. I use aggressive and combo and sequential. So the risk levels show for everything, and this aggressive sequential cell risk level could become qualified and confirmed, just like the relative retracement up 3 and the 50% exhaustion up for propulsion in the other chart. This one didn't make it, as the aggressive combo is at 4782.80, and the sequential cell countdown 13 completion printed again. So end of day today on the 19th, if it closes above this high, 4754.33, we'll get to keep it. And that's an indication of trend exhaustion, but again, that doesn't mean it's going to stop and head down. It could very well just keep going and get up to the recycle count 18. It's on the 12 now, so each week, if that week ends up closing higher than 4 bars previous, then we'll get another cell setup count. So next week it's a 13, so all the way to 18, and that's a long way away, but can happen. But the indication now is that things are completely exhausted, at least in this weekly chart. The daily chart has several instances of getting levels qualified and confirmed, and if that happens end of day today, there could be some more upside before downside for sure. And there's no danger of getting any of these cell risk levels qualified or confirmed. It's not even going to have the qualification status if there's a close higher than this close from last week, 4783.83. So if it closes higher than that, then these usually act as resistance here. So 4834. And to the downside, this aggressive sequential cell risk level has been pretty good support. So it bounced off of it here. So that level is 4671.96.